according to me, the best way to learn IFRS is to learn it from annual report. Everything is given in annual report, right? And annual report will provide you better idea about IFRS, right? IFRS, or you can say Ind AS. So first we will see that how India has adopted IFRS in India and what name they have given, right? Then we will see what is the logic why they have adopted IFRS in India, and after that we will see that what are the differences which took place after adoption of IFRS in India, right? So these things we will be learning right now. So just give me a second, I have to share screen. Okay, so if you see here, what is the logic why India has adopted IFRS in India, right? So first of all, hopefully this screen is visible to you all.
Yes, sir.
Yeah. So if you see here, in year 2015, what Indian government has done, Indian government has adopted IFRS. What is the reason why India has adopted IFRS? First of all, I will tell you the full form of IFRS. It is International Financial Reporting Standards, right? So in India, what we do, or what we were doing, we were following accounting standards. Still, we are following accounting standards, but there are some companies who are following accounting standards or who have to follow accounting standards. So what is the logic behind accounting standard? What are accounting standards? So it's a set of rules which are created by accounting bodies, right? You might be thinking that what kind of rules are created, or why accounting bodies they have created rules. So let's suppose if I take example of any company, let's suppose I'm taking example of Reliance, or if I'm taking example of Tata, what they will be doing every year, they have to prepare financial statement, right? Pakke se they have to prepare financial statement. Now, if you see the financial statement of any company, let's suppose you're saying you want to check the financial statement of Reliance Limited, or you are checking the financial statement of Tata or any other company. So what you will get there, you will see that they are preparing profit and loss account, they are preparing balance sheet, they are preparing cash flow statement, they are also giving notes to accounts, or they are preparing notes, right? They are preparing a statement of changes in equity. So what all companies do, they prepare these statements, right? Every company, they have to prepare these statement, right? Now, if you see when company prepare P&L account, so in P&L account, in top, what they do, they record revenue, right? In P&L account, what they do, they record revenue. After that, they record expenses. In expenses, they record purchase of raw material, they record changes in inventory, they record remuneration or salary to employees. So this is how they prepare P&L account. So there's a standard format given for profit and loss account. Similarly, they have given standard format for every statement, for balance sheet, for cash flow statement, for notes to accounts, for statement of changes in equity. They have provided standard format. Now how you will recognize the revenue? Now every company has to follow accrual concept. So when they are recognizing any transaction in their books of accounts, so they have to follow accrual concept. There are two concepts, that is cash concept and accrual concept. So it is given in standards or accounting books that every company has to follow accrual concept when they are recognizing revenue. Now how they can recognize the revenue in their books of accounts? So to recognize revenue in books of accounts, what they have to do, they have to follow the rules which are given in accounting books, or you can say which are given by accounting bodies, right? So those rules which are given by accounting bodies, those rules are accounting standards. So if let's suppose I'm running a company and let's suppose I have performed some credit sale. Right now, I'm not receiving cash immediately because I have performed credit sale, right? I won't be receiving cash immediately. So here, how I can recognize the revenue? So what accounting body says that if there is certainty that you will be realizing the cash in future, right? I have performed credit sale, and accounting body says that if there is certainty that you will be realizing the cash in future, so definitely you should recognize the revenue in your books of accounts, right? Definitely you should recognize revenue in your books of accounts. And if there is no certainty of realizing cash in future, definitely, then you should not recognize the revenue in your books of accounts. So let's suppose if I'm performing sale to Reliance Limited or Tata Limited, they are a reputed company and there are high chances that I will be getting my money back. right? I have performed credit sale. There are high chances that I will be receiving cash from these companies in future. So definitely in this given case, I will recognize the revenue. But if I'm performing sale to company like Kingfisher, right, or person like Modi, Nirav Modi, so definitely there are high chances I won't be receiving cash, right? So in this case, I won't be recognizing revenue in my books of accounts. So these things are given in accounting standards. Everything is given in accounting standard. So before you will be preparing financial statement, what you have to do, you have to read accounting standards very carefully, right? So this is what the meaning of accounting standard or IFRS. They talks about rules that how you will be recognizing transaction in your books of accounts. They give detailed description or detailed idea about every transaction, right? So this is what an idea behind accounting standard or IFRS, right? So before 2015, all companies, they were following accounting standards in India. There were a set of rules which are made by accounting bodies, and all companies, they were following accounting standards. And if I talk about IFRS, so across globe, more than 200 countries, they are following IFRS, International Financial Reporting Standards. Across globe, more than 200 countries, they are following IFRS. So what India has decided that they will be adopting IFRS. When they have decided in year 2015, what India has decided that they will be adopting IFRS in India. Now you might be thinking that if India is following accounting standards, so what is the logic why Indian government is adopting IFRS in India? If you see the difference between these two books, IFRS is a set of rules, accounting standard is also a set of rules. So there's a huge difference. There's a huge difference, and we will see those differences in detail in coming time. So there's a huge difference in IFRS and accounting standard. Now, if you can see here, if 200 countries, they are following IFRS, right? So definitely our set of books and their set of books, they will be totally different, and there will be huge differences, right? If I will show you that there are huge differences in IFRS and accounting standard, even though there was a difference in format also. If you see the format, the financial statement which are prepared by using IFRS law, their financial statement, their P&L account, their balance sheet will be different from Indian financial statement, right? I will show you those financial statement in coming time, right? So if 200 countries, they are following IFRS, and India is the exception who is following accounting standard, or there are some countries who are exception who are following their own set of rules and regulations, right? So definitely there will be difference in financial statement. Now let's suppose if I take example of Reliance Limited here, right? Reliance Limited, they are using accounting standard, or you can say they were using accounting standard before 2015, right? Now let's suppose I'm a foreign investor, and if I want to invest my money in Reliance Limited, so definitely before investing my money in Reliance Limited, I am a foreigner, and I have learned IFRS. I have never learned accounting standard, right? Now if I want to invest my money in Reliance Limited, definitely what I will be doing, I will be reading the financial statement of Reliance Limited. I will read, I will analyze the financial statement of Reliance Limited. But I know IFRS, I don't know accounting standard, right? Now, if you see here, it will be very difficult for me to read the financial statement of Reliance Limited. Why it will be very difficult for me to read the financial statement of Reliance Limited? Because they are following different set of rules, right? And they have learned IFRS. Foreign investors, they have learned IFRS. They don't know about accounting standard. Now, if you see here, there is no uniformity, right? Why there is no uniformity? Because we are following different set of rules and regulations. So it will become very difficult for investor to read and understand the financial statement of Indian companies, and they were not investing in Indian companies just because they were not able to understand Indian financial statement, right? So this could be the one reason. There are several reasons why India has adopted IFRS. Now I will give you one more example here, right? If I'm taking example of now Tata, Tata, they are having their branches across India. They are having their subsidiaries in different countries, right? So foreign one, foreign two, foreign three, foreign four, right? These all foreign countries, they are following IFRS, right? And they are preparing their books by using IFRS, right? And the branches or company which is located in India, the branch of Tata which is located in India, Indian branch, they are preparing their financial statement by using accounting standard, right? At the end, what they have to do, they have to prepare consolidated financial statement, right? at the end, what Tata will do, Tata will prepare consolidated financial statement. Now, if you see here, what they have done, they have prepared their Indian company book by using accounting standard, Indian accounting standard, right? And other foreign subsidiaries, they are preparing their books by following IFRS, right? Now, when they will merge these books or when they will consolidate these books, definitely they will face problem. Why they will face problem? Because they have to change the rules now, right? Here, Indian company, Tata company, they have to consolidate their books. So what they will do, they will convert these financial statements which are prepared as per IFRS, they will convert those financial statements by using accounting standard. And again, what they have to do, they have to do a lot of work, right? So that is the reason what India has done. India has adopted IFRS in India. So there are several reasons we will discuss in detail in coming time. I have given you the idea that what is the logic why India has adopted IFRS in India. So in year 2015, what we have done, what Indian government has done, they have adopted IFRS in India, right? And they have given new name to this IFRS. We have copied the law. There are small changes, small differences between IFRS and Indian accounting standard, new accounting standard, right? So what India has done, India has copied the law of IFRS and they have pasted the same in India. And they have given new name, that is Ind AS, right? So you can say that Ind AS is a copy of IFRS, right? Simply you can say that Ind AS is a copy of IFRS. Are you able to understand? So that is the reason what India has done. India has adopted IFRS in India. Now further, if you see, I will show you the annual report in some time. Now, if you see here, so in year 2015, India has adopted Ind AS, and to whom this Ind AS is applicable. Still, we are following old accounting standards. We are following two set of rules. One is old accounting standard, and second is Ind AS. To whom Ind AS is applicable? Ind AS is applicable to listed company. I will share the notes with you. So if you don't want to write, you just ignore it. Ind AS is applicable to all listed companies. Companies who are listed in stock exchange of India, Ind AS will be applicable on them, right? Or companies whose net worth is greater than 250 crore. Companies whose net worth is greater than 250 crore, on these companies, this Ind AS will be applicable, right? Or company who is in process of listing. Company who is in process of listing. They have applied for IPO, right? They have applied for listing. So on those companies also, Ind AS will be applicable. Or you can say subsidiary, joint venture, or associate of above company. Subsidiary, joint venture, or associate of above company, on them also this Ind AS is applicable, right? And in which company this accounting standard will be applicable? Except these companies, accounting standard will be applicable. So if I take example of any small company whose net worth is 20 crore rupees, so what they can do, they can follow accounting standard, right? It is not mandatory for them to follow accounting standard. Voluntarily, what they can do, they can choose Ind AS also, right? But if companies whose net worth is lesser than 250 crore, they can adopt accounting standard. So if you see, so you might be able to understand that what is the reason why India has adopted IFRS in India, right? Now I will be giving you a few small examples which will clear your doubts, or which will give you more instinct about this IFRS, that why IFRS has been implemented in India. So if you see here, you can see the annual report of Dabur Limited. I have opened the annual report of Dabur Limited. Now, if you see statement of profit and loss account is given here, and you can see the statement of profit and loss account of Dabur is given here, right? So this profit and loss account is for the year ending 31st March 2015, right? You can see the date here. This profit and loss account is for the year ending 31st March 2015, right? Now, if you see here, what they have done, they have recorded revenue in top, right? After they are reducing excise duty, they have calculated net revenue from sale of product, right? Net revenue from sale of product. Then they have written their sale of services, and after that they are writing down here other operating revenue. So other operating revenue, it may include interest, rental income, dividend, etc., right? Then what they have done the total of all three items, right? That is net revenue from sale of products, sale of services, and other operating revenue. So here you can see that their total revenue from operation is 5,431, right? After that, what they are doing, they are recognizing their expenses, right? Here they are recognizing their expenses. I'm sorry, I made a mistake. Other operating revenue, it will not include interest, rent, or dividend. Other income includes interest, rent, and dividend, right? Other operating revenue is a different thing. So if you see their total revenue is given, so what the total revenue is of 5,569, right? After that, they are recognizing expenses. So here expenses include cost of material consumed, purchase, work in progress, stock in trade, employee benefit, depreciation, etc., etc., right? So they will do the total of all expenses, and here you can see the total of expense is given. So let's suppose our total revenue is A and total expense is B here, right? Now, if you see here, so total revenue and total expense is given. Now, if we want to calculate profit before tax, so what we will do, we will take A and we will reduce this A by B, right? So here we will get profit before tax. I'm ignoring extraordinary items and exceptional items, right? Right now, I want to make you understand that why IFRS has been implemented. So if you see profit, if I want to calculate profit before tax, so what I will do, I will take total revenue and I will reduce total expense. And here I will get profit before tax. And after that, what we do, we reduce taxes. We reduce taxes. So once you will reduce tax, you will get here profit after tax, right? You will get here profit after tax, that is PAT, right? And this is how we prepare profit and loss account. And we will be transferring this balance in balance sheet, or you can say reserve and surplus account, right? We will be transferring this amount in reserve and surplus account. This is how we were preparing financial statement before year 2015. Now I will show you new profit and loss account of Dabur Limited, right? Now you can see the profit and loss account for the year ending 31st March 2021. Here you can see this profit and loss account is given for the year ending 31st March 2021, right? Here you can see, oh, this is not profit and loss account, this is balance sheet. Yeah, you can see the profit and loss account of Dabur Limited, 31st March 2021. Here they are recognizing revenue in top. After that, they are recognizing other income. Then what they have done, they have calculated total of income, right? So total of income is A for us. Then after that, you can see cost of material consumed is given, excise duty, purchase, finance cost, other expenses, and they have done the total of expenses, right? So here you can see the total of expenses given 7,829, right? After that, if you see, if you want to calculate profit before tax, so what you will do, you will simply take a difference between total revenue and total expenses, and here you will get profit before tax. So here profit before tax is given 2056, right? This profit before tax is 2056. Now what you will do, you will reduce all the taxes and you will get here profit after tax, right? You will get here profit after tax, right? So this we were doing the same thing, right, in year 2015 also, and in year 2021 also. Now if you see after profit after calculating profit after tax, here another line item is given. You can see other comprehensive income is given, right? You can see here other comprehensive income is given. Now in other comprehensive income, you can see item that will not be reclassified to P&L, income tax relating to item that will not reclassified to P&L. Then you can see item that will be reclassified to P&L. These items are given, right? So if you see, they have inserted some additional points in profit and loss account. So can you tell me that what do you understand by term other comprehensive income? Do you have any idea about other comprehensive income? They've included other comprehensive income in profit and loss account. So can you tell me the reason why they have included other comprehensive income, or what do you understand by term other comprehensive income? Any idea? Okay, so you know what is other comprehensive income? So I will tell you that what is other comprehensive income, and just wait. Okay, so if you see here, we have seen if company is not following IFRS or Ind AS, right, or company is preparing their financial statement before 2015 or up to 2015. So we have seen the format. Their format is like they have to record revenue and expenses, and they will be calculating profit, right? So first they will be recognizing revenue, and after that they have to record expenses, right? Then this is your A point B. Now, if you want to calculate PBT, profit before tax, so what you will do, you will take the difference of revenue and expense, right? Here you will get PBT. Then what you have to do, you have to reduce taxes, right? And you will get here PAT, right? And this whole amount, what we used to do, we used to transfer in reserve and surplus account, right? I will show you the calculation also, don't worry. This amount we will be transferring in reserve and surplus account, right? And this will be transferred in balance sheet, right? Now, if when we are preparing P&L account for the year ending 31st March 2021, so you can see the format here. Now here there is difference in format. Here there is difference in format, right? So you can see revenue is given here. If you see here, revenue is given. So we have to record revenue. After that, we will be recording expenses. Right now, if I want to calculate PBT, so method will be same. That is A, B. It will be A minus B. Right. Then we have to reduce taxes. Then here we will get PAT. Right now, if you see, we have seen a few other items are given in new format. One of these items are other comprehensive income. Right, other comprehensive income, and they have given 4-line item under the definition of other comprehensive income. Right, we have seen that 4-line items are given under the definition of other comprehensive income. Now, what is the logic behind other comprehensive income? And now, if you see that why they have included this other comprehensive income. Okay, so before discussing more about other comprehensive income, I would like to tell you about Schedule 3. Right, what is Schedule 3? When we prepare financial statement, so what we do, we follow Schedule 3. Why we follow Schedule 3? Because Schedule 3 talks about format. Schedule 3 talks about format, that how you will be preparing the which format you will be following to prepare financial statement, right? So in Schedule 3, if you see, there are 2 divisions. First is division 1 and second is division 2. Right. Now, division 1 is applicable for those companies who are following accounting standard. Right. And this format is given in division 1. This format is given in division 1, format number 1. Right. Format number 1 is given in division 1. Company who have to follow Ind AS. Company who have to follow Ind AS, for them this new format is applicable, right? In IFRS also, when we learn IFRS, now we are learning IFRS because Ind AS and IFRS, they are totally same. There are small differences, we will cover those differences also. So it means if you are learning IFRS, automatically you will be learning Ind AS, right? So same, companies who are following IFRS, they have to follow this format. Companies who are following Ind AS or IFRS, what they have to do, they have to follow this format, right? So this format number 2 will be applicable for those companies who are following IFRS or Ind AS, right? Now we will see, I have already told you the format. We will see the format of balance sheet and cash flow statement also. Right now we will be discussing in detail about profit and loss account. So I will be giving you one example, right? So if you see, I'm taking one example and you have to tell me the adjustments. Example. Let's suppose in year 2010, what you have done, you have started a business, right? In year 2010, you have started a business, real estate business. And what you have done, you have invested capital of rupees 100 lakh in your business. right? And from this capital, what you're doing, you're buying land for your business, right? So let's suppose you have purchased land of 80 lakh rupees for your business, right? And remaining you are keeping cash with you, right? So when you will be preparing your balance sheet, so how it will look here for balance sheet for the year 2010. So here you can see you have introduced capital of rupees 100 lakh, right? And what you have done from this capital, you are buying land of rupees 80 lakh, right? And balance amount is cash, right? Balance amount is cash, right? Now in year 2015, what you have done, you have revalued your land, right? You're not buying or selling this property. You have started a company. In that company, you're not performing much transactions, right? So in year 2015, what you have done, you have revalued this land, right? Right now, the value of this land in year 2015 is rupees, let's suppose 3 crore, right? Right now, the value of this land is 3 crore. Revalued value of land. Revalued value of land is 300 lakh, right? Now, hopefully you might be able to recall that what will be the adjustment for this particular transaction, right? We have purchased one land whose value was 80 lakh, right? Now, if you see, if you're checking the current market price of this land, so it is 300 lakh. Now, what adjustment you will provide as per old law, or you can say as per accounting standard, or as per your understanding, what adjustment you will provide to adjust this transaction in financial statement? So you can see there is a revaluation gain. How there is a revaluation gain? So I will tell you the transactions, what transactions you have to perform or what journal entries you have to record. So if you see current market price of land is how much? It is 300 lakh, right? Current market price of land is 300 lakh, right? In year 2015. When you have purchased this land, you have paid 80 lakh rupees, right? You have paid 80 lakh rupees in year 2010, right? So you can see there is a gain of 220 lakh. This is your revaluation gain, right? This is your revaluation gain. Now, where you will provide the effect of this gain in financial statement? So definitely you will be saying that we will be creating revaluation reserve, right? If there is any revaluation gain, so what we do, we transfer that amount in revaluation reserve. So what you have to do to transfer this amount in revaluation reserve, you will be recording some journal entry, right? You will be passing some journal entry. Now, what journal entry you will pass to record this transaction? So definitely when there is a revaluation gain, so first entry which you will record, that is land account debit to revaluation gain, right? And what is the amount of revaluation gain? Amount of revaluation gain is 220 lakh, right? It is 220 lakh, right? Now what you will be doing, you will be transferring this revaluation gain in revaluation reserve, right? So what another journal entry you will record? You will record revaluation gain account debit to revaluation reserve. This entry you will be recording, right? 220 lakh. It will be 220 lakh, right? Now, what will be the effect of this journal entry in new balance sheet for the year 2015? Here, the value of land is going to be 300 lakh. Right? Value of land is going to be how much? 300 lakh. Your capital value is going to be same 100 lakh. And here you will be recording revaluation reserve. So there is a revaluation creation. We have created revaluation reserve of 220 lakh, right? So here I will be recording revaluation gain of 220 lakh rupees in balance sheet, and we are having cash of rupees 20 lakh with us. So what is the total of balance sheet? Total of balance sheet is 320 lakh and 320 lakh here. Right? This is what a total of balance sheet, right? Now, if you see here, what we have done, we have shown the effect of revaluation gain in balance sheet itself. We have not shown any effect of revaluation gain in profit and loss account. We have not shown any effect of revaluation gain in profit and loss account, right? So there are several transactions. Generally, we can say those transactions are unrealized transactions. So that is the reason we don't provide any effect of those transactions in profit and loss account. So if there is a revaluation of any property and if we are gaining something, so we can't show that transaction in P&L account. Why? Because it's an unrealized gain. Unless and until we are not selling that property, we won't be realizing any profit, right? And what our accounting standard says that we should not record those profit in profit and loss account, right? That is absolutely correct. But if you see here, so this is our profit, right? This is, even though it's an unrealized profit, if there is increase in the value of property, it's unrealized profit. Even though it's an unrealized profit, shareholder or stakeholder, they must know about this profit, right? Investors or shareholders or stakeholders, they should know about this profit, right? Now, if just try to understand or just try to imagine, if we are not showing this profit in profit and loss account, right? If we are not showing this profit in profit and loss account, so it will be very difficult for investor or stakeholders to find out this profit, right? Let's suppose I am an engineer or I am a doctor, right? Definitely, if I am an engineer, if I am a doctor, definitely if I'm investing my money in securities, I will definitely read profit and loss account of any company, right? And now, if I talk about myself, if I am a doctor, I don't have much understanding about financial statement. What I will do, I will check the profit and loss account, and whatever end value will be given in profit and loss account, that profit will be profit for me in given situation, right? Because see, I don't know that what is unrealized profit and where it will be shown, right? I will check the profit and loss account, and whatever end value will be given, that will be the final value in my brain, right? But to resolve this problem, what IFRS do? IFRS, they show this particular profit, revalued profit, and there are several profits we will discuss, right? They show these revalued profit in profit and loss account. What they have done, they have created another statement, right? Generally, IFRS allow you to prepare two statement of profit and loss account. In India, we follow one statement, but both are same, right? Both are same. So now, instead of showing direct this amount in balance sheet, what we have to do, we have to bring this amount in profit and loss account also, right? And we have given a new name, that is other comprehensive income, right? So if there is any unrealized profit or loss, right? If there is any unrealized profit or loss, those unrealized profit and loss, what we have to do, we have to show in other comprehensive income, and that other comprehensive income is a part of profit and loss account. It's a part of profit and loss account. Now we will discuss more about other comprehensive income, so you will get the idea. Now, when we are preparing new books, right, according to Ind AS or IFRS, now how we have to provide the adjustment, we will take the same example, and now we will see that how we have to record the transaction in books of accounts by using new set of rules, right? Now, if you see, we have seen the format already, but I will show you the format again. So when you are preparing books by using new set of accounting standard, that is Ind AS or IFRS, right? So here, what you have to prepare, first item or first statement which you have to prepare is comprehensive income. Comprehensive income. Then second is balance sheet. You might be thinking that what is comprehensive income? Just wait for a few seconds. We will discuss what is comprehensive income. After that, you have to prepare cash flow statement. Then you have to prepare statement of changes in equity. You might not be knowing about statement of changes in equity. We will discuss in detail. Then you have to prepare notes to accounts. I think someone has unmuted mic. Can you please mute your mic? Ramya, can you please mute yourself? Yeah. Sure. So if you see here, what is the meaning of comprehensive income? If you see here, I have written comprehensive income. Comprehensive income is a combination. Comprehensive income is a combination of profit and loss account and other comprehensive income. Comprehensive income is a combination of profit and loss account and other comprehensive income. So we know that what items we record in profit and loss account. We already know the format of profit and loss account, that first we will be recording revenue. After that, we will be recording all the expenses and we will be calculating PAT, right? But in other comprehensive income, what we will be doing usually, right? Usually we record unrealized gains and losses. Right. Usually, I'm saying it is not 100% correct that we will be recording only unrealized gains and losses. There are some exceptions. Those exceptions we will be discussing in coming sessions, right? So usually we record unrealized gains and losses, right? So I can give you the example. If there is any revaluation gain or loss, that will be adjusted in other comprehensive income. Give me a second. I have to. Yeah. So here, what we have to do, we have to recognize revaluation gain or losses from any property in other comprehensive income. Or there could be several other type of transaction which we can record in this financial statement in other comprehensive income. So I can give you some more example. Foreign exchange gains or losses. There are some specified kind of transaction which you have to record here. Or there are some employee benefit related transaction which we have to record here, right? So we will discuss those transactions in detail, right? So if there is any unrealized gain or losses, what we have to do, we have to record in other comprehensive income, right? So this is what the difference between old format and new format. Now, if you see here, we will see the same example to understand this other comprehensive concept in detail, right? So if you see here, so there was a revaluation gain, and what we were doing, we were directly transferring that revaluation gain in balance sheet without providing any effect in profit and loss account, right? Now, when we are preparing books as per new statement or new accounting rules, how we will be showing this transaction in books of accounts, right? So now we have seen there is a revaluation gain of how much? 220 lakh rupees, right? Now what we have to do, we have to show this transaction in profit and loss account first. So as per new set of books, when we are preparing profit and loss account, so we have to prepare one more statement, that is other comprehensive income statement, right? So normally we will calculate PAT. Now we have seen there is a revaluation gain. So here we will write down revaluation gain. What is the total amount of revaluation gain? It is 220 lakh, right? So we will be showing this amount in other comprehensive income, right? And what we have to do, we have to provide tax effect also, right? We have to provide tax adjustment or tax effect on our transaction. But right now we won't be discussing much about tax effect. Or in coming sessions we will be discussing about tax effect. So here I'm leaving it blank right now, right? So we have to provide tax effect also, but you can ignore tax effect right now. So now if you see here, what we have done, we have shown this revaluation gain in other comprehensive income, right? Now this revaluation gain will be transferred in other equity. Now you might be thinking that what is other equity? We usually, we prepare reserve and surplus account, right? What we do, we prepare reserve and surplus account. Now that reserve and surplus account has been replaced by new ledger, that is other equity, right? Reserve and surplus account has been replaced by new ledger, that is other equity. Now what is the logic why they have replaced reserve and surplus with other equity? So I will tell you the reason also, because we have included one new statement, that is other comprehensive income. And if we are including other comprehensive income, so what we have to do, we have to transfer this other comprehensive income balance in balance sheet, right? So now if we have to transfer this balance in balance sheet, so definitely we have to transfer this amount in some ledger, and after that what we can do, transfer this amount in balance sheet, right? So here in other equity, what we will be doing, in other equity, we will be transferring this balance. There's a revaluation gain. There is a revaluation gain of rupees 220 lakh. And you know, now in other equity, we will be preparing reserve and surplus account. We will be preparing reserve and surplus account. So you can see that to include other comprehensive income balance, what they have done, they have replaced other equity, reserve and surplus with other equity, and they are including this reserve and surplus in other equity itself. So you can say other equity is a combination of other comprehensive income balance and reserve and surplus balance, right? Now we don't have any amount of reserve and surplus right now, so we will do the total of this other equity. So here total of other equity is how much? It is 220 lakh. And this amount, what we will be doing, we will be transferring in balance sheet, right? This amount we will be transferring in balance sheet. So you can see here in first example in this old accounting standard financial statement, what we have done, we have not shown this transaction in profit and loss account, right? Directly what we have done, we have transferred this balance in balance sheet, right? Instead of transferring this balance in P&L account, we have shown this transaction only in balance sheet. But when we are preparing books by following new accounting standards or IFRS, so you can see here what we have done. First, we have shown this particular amount in profit and loss account. Directly, we are not showing in profit and loss account. We are showing in other comprehensive income. But other comprehensive income is making a part of profit and loss account, right? So first, we have shown this amount in profit and loss account. And after that, we are transferring this amount in balance sheet, right? Now, let's suppose I'm assuming here, let's suppose company during the year, company has earned profit of 100 lakh, right? During the year, let's suppose company has earned profit of 100 lakh rupees, right? Now, when you will do the total of comprehensive income, I have already told you that comprehensive income is a total of profit and loss account and other comprehensive income, right? So here, when you will be writing here, total of comprehensive income, which is sum of PAT and other comprehensive income. So here total will be how much? Total will be 100 lakh plus 220 lakh. It will be 320 lakh rupees. It will be 320 lakh rupees. Now you just let me know, being a shareholder, right? Being a shareholder, when you will check the profit and loss account, so definitely you will be using this as a final value, right? To decide whether to invest in this company or not, you will be using this as a final value. Instead of using this as a final value, what you will be doing, you will be using this as a final value. Why you will be using this as a final value? Because you will be able to see the revaluation gain also. When you will be checking the P&L account of any company, so you will be able to see revaluation gain of company, or there could be several other gains or losses of that company. So after adjustment of revaluation gain or some other revaluation losses, or there are some other adjustment, you will get the final amount, right? So being an investor, this amount is more accurate amount, or this amount is showing you the clear picture of company instead of this PAT only, right? So this is the reason what IFRS do. IFRS include other comprehensive income in their profit and loss account. It provides clear picture, it provides you accurate picture that how company is performing actually, right? So it could be negative value also, right? It is not necessary that other comprehensive income balance will be always positive. It could be negative also. So if other comprehensive income balance is negative, your profit will come in negative, or it will be lesser than PAT, right? So we will see the annual report now. So it will give you clear picture. Yeah. So if you see here, so statement of profit and loss account of Dabur is given for the year ending 31st March 2021. Here, what company has done? Company has calculated PAT, right? Here you can see what company has done. Company has calculated PAT, right? After PAT, what company is doing? Company is showing you other comprehensive income statement, right? We will see the schedule, we will see the note of other comprehensive income, that is note number 44. So in detail, we will see, but right now you just, you can assume that this is revaluation gain or loss, right? This is revaluation gain or loss. There are several line items which you have to check, but right now you assume it is a revaluation gain or loss, right? So you can see here, they have adjusted their revaluation gain and losses also, right? So this value is in negative, right? You can see this value is in negative, that is minus 88.2 crore rupees, right? So their profit after tax was 1,694 rupees. Now, after adjustment of other comprehensive income, you can see their profit is of 1,600 6 crore rupees. So their other comprehensive income balance is negative. It means they are suffering revaluation losses, right? So that is the reason their profit is reducing, right? So here you can see the total comprehensive income balance is how much? It is 1,606 crore rupees, right? So it will give you clear picture. It will give you clear picture about financial statement. Now, what will be the further adjustment? We will see the further adjustment, that how further we have to provide adjustment on these transactions, right? We will see this will be adjusted in other equity. Before checking the other equity ledger, I will show you normal profit and loss account, which you usually prepare, right? So if you can see here, we have calculated profit after tax. Now this profit after tax will be transferred in reserve and surplus account, right? Here we have seen profit after tax is given how much? 762.58 crore, right? Now where we will be transferring this amount? Definitely we will be transferring this amount in reserve and surplus account. So I will show you the reserve and surplus account. Just wait. We will check the amount first. It is 762.58 crores. Yeah, you can see here reserve and surplus account is given, right? So reserve and surplus account for the year 2015 is given. We prepare reserve and surplus account. Hopefully you know this thing. So in reserve and surplus account, we show capital reserve, security premium account, then opening balance is given, right? Opening balance is given. That is 37.92, right? This is the opening balance of security premium account. Then during the year, they have added security premium of 128.32. So here total is given. Then investment revaluation reserve opening balance is given. Then what amount they have added, right? So these items are given. Then if you see further, general reserve balance is given here, right? General reserve balance opening balance is given, 239. Then addition made during the year, that is 80. Can you please mute your mic? Hari Babu. Yeah. Hari Babu, can you please mute your mic?
Okay.
Okay. So if you see here, so yeah, sorry. So opening balance of reserve is given. Then what additions they have made, then this is given. Then opening balance of profit and loss account is given, right? This is previous year balance, and during the year, company has earned profit of how much? 762 crore. We have seen in profit and loss account that company is making profit of 762 crore, right? So what we do, we transfer this profit in reserve and surplus account, and that final balance will be transferred in balance sheet, right? So here you can see the final balance of reserve and surplus account, that is 2160, that will be transferred in balance sheet, right? You might be knowing this thing. So this is how we prepare profit and loss account, and after that we transfer final balance in balance sheet, right? Now if you see the new format, how new format is different from this old format. So what we have to do, we have to remember these values, right? So here you can see comprehensive income total balance is given how much? 1,606, right? PAT is given how much? 1,694. We have to remember these values because I will be showing you the calculations in 1 minute. So if you see, PAT is given 1,694 and other comprehensive income balance is given 88. Right? It is, I think, 88. Wait. Yeah, it is 88. And there are these balances which we have to remember, right? Now, instead of preparing reserve and surplus account, what companies do now, they prepare other equity statement. What is the reason why they prepare other equity statement? Just because now they have to adjust other comprehensive income balance, right? So instead of preparing reserve and surplus account, they will be preparing other equity, and that other equity format will be including this reserve and surplus account balance, right? So here other equity statement is given. So just wait, I have to rotate it. Yeah, so you can see consolidated statement is given. So this is for year 2019. We have to check for year 2021, right? So yeah, so opening balances are given. Here you can see this is other equity statement. And I will show you that why I was saying that why company prepare other equity now instead of reserve and surplus. So I will write down the formula for other equity. It is not formula, it's a general statement. Other equity is a total of other comprehensive income balances, right? We have already discussed that what is other comprehensive income, not in detail, but I have given you the idea, and reserve and surplus, right? So instead of preparing reserve and surplus, now what company do? Company prepare other equity. Your other equity will be including other comprehensive income and reserve and surplus, right? Now, if you see here, so reserve and surplus balance is given, right? And after that, what they are doing, they are showing you balance of other comprehensive income, right? So total of reserve and surplus and other comprehensive income is going to be your other equity balance, and this balance will be transferred in balance sheet, right? So if you see here, opening balance is given, right? So opening balance of capital reserve, security premium, statutory reserve, we have seen these transactions, these line items are given in old reserve and surplus account also, right? Then special fund, employee housing reserve, these all items belongs to reserve and surplus, right? And here other comprehensive income is given, right? So you have to assume reserve revaluation gain, because these terms are new for you. For to understand these terms, you have to learn few accounting standards, right? So once we will learn those accounting standards, then you will be able to understand these foreign currency translation reserve and debt instrument through other comprehensive income, right? So right now you just assume revaluation gain or losses, right? Now if you see here, opening balances are given. What company is doing? Company is what they are doing, they are transferring these balances, right? So we have seen that what was the total profit of company? Total profit of company was, profit after tax was how much? 1,697, I think, right? This was the amount, right? Company's profit after tax was how much? It was 1,697.
94.
It was 94.
Yeah.
Okay, I will check it. Okay, it is given here. If you see profit for the year, I'm sorry, here it is given. It is, I think, they have done approx, they have taken approx value. The final figure is 1,693.30, right? If you see here, so this value is given. Now, if you see what they are doing, they are adjusting other comprehensive income balance, right? You can see here, they are adjusting other comprehensive income balance. Right? They are adjusting other comprehensive income balance. So this profit is before other comprehensive income adjustment. Now we have seen there are small amounts which they have adjusted. So remeasurement gain on deferred defined benefit plan, right? It's a part of other comprehensive income. You have to assume it as a revaluation gain and loss. You have to assume it as a revaluation gain or loss. Right? So you just assume revaluation gain or loss here. So if you see, so we have seen the total of other comprehensive income balance also, right? So total was around 88 rupees, 88 crore rupees, right? So if you do the total of these three values now, so you will get the same amount, 88 rupees, right? If you do the total of these values, you will get the same amount, that is 88 crore rupees, right? It's a part of other comprehensive income. So you can see here, total profit is given. Total profit is how much? It includes a non-controlling interest also, non-controlling or minority interest amount. We will discuss it. You just right now focus on this value. So if you see, total profit was, PAT was how much? 1,694, right? And after that, we have calculated other comprehensive income. That was 88 crore rupees. If you do the total of these three values, you will get 88 crore only, right? So if you see, the total is 88 crore, it was negative value, right? So if you do the total of these three values and this final value, that is PAT 1,694, so you will get this value 1,606. We have seen that what was the final balance of comprehensive income? It was 1,606, right? Now if you see, there are further amount given. If company is paying dividend, so definitely whenever company pay dividend, what they do, they adjust it from profit after tax, right? Whatever profit after tax is available, from that amount, what company do, company pays dividend. So if company is paying any dividend, so that will be reduced from where? It will be reduced from profit after tax, right? So here you can see other equity, it includes reserve and surplus balance and comprehensive income, other comprehensive income balance. And what we have done, we have calculated total profit, which is to be transferred in balance sheet. But before transferring this balance, if company is paying any dividend, so that dividend amount is to be adjusted, right? And if there is any change in equity, right? Any change in equity in the sense recognition of share-based payment expenses, right? There is specific accounting standard. If company is giving some shares to their employee, right? If company is giving some share to their employees, so that expense is to be adjusted. We will discuss those transactions in coming accounting standards. So if you see here, so this final balance, what company will be doing, company will be transferring in balance sheet, and they will give heading to the line item is other equity, right? So we will check the balance sheet. So what is the final balance which company will be transferring in balance sheet? It is 7,523. Now I will show you the balance sheet. You just have to remember this value, 7,523. Yeah, you can see here. Okay, so other equity balance is given here, right? Other equity balance is given here. This is the other equity balance, right? And what they have done, they have transferred this amount in balance sheet. I think amount was same, right? 700, 486. This was the amount, right? So what company is doing? Company is transferring this final balance in balance sheet in the name of other equity, right? If you see the old balance sheet, so there what company do? Company transfer reserve and surplus balance. Here company is transferring reserve and surplus balance, and along with reserve and surplus, they are transferring other comprehensive income balance also. See, there will be no difference in amount. Amount will be same. Why they are preparing other comprehensive income or other equity statement? Just to provide adjustment of unrealized cash or unrealized losses in profit and loss account. So that is the reason what company is doing. Company is preparing other equity statement and other comprehensive income statement, right? Hopefully you got the idea, right? That what is the reason why they have introduced Ind AS or IFRS in India, and why a company is providing additional statement to prepare financial statement, right? So hopefully you got the idea. Now, if you see the balance sheet here, if you see the balance sheet, you can see that there are lots of changes in balance sheet also, right? We will read the line items and I will give you the idea about balance sheet also. So if you see the old balance sheet, first of all, I will show you the old balance sheet. And in case if you're having any doubt, you can ask your queries. In case if you're having any doubt related to any concept which we have discussed till now, you can ask your queries.
Hello.
Yeah.
So when it started class at 7:30, you told, but at 7:30 it was not started. I was waiting for that, and till 7:45 I was waiting, and this class was not started, and I went off. So again, when I was checking, it was started.
See, actually, I got a wrong link. I started at 7:30 sharp, but I got a wrong link. So I have started this session at 8. I think at 8 or 8:05. When you have joined this session?
8:30, I think.
8:30. So what you can do, you can watch the recording. Recording will be available in LMS, so you can watch the recording. Right? In case if you have missed anything, you can watch the recording.
No, this is 7th, 6th or 7th time. They are not managing this timings, you know.
I'm not able to understand. What do you say?
7th time they are, miscommunication happened. They are saying some timings, and they are saying every time they are postponing the timing.
Okay. What I will do now, definitely. I think you are in that Telegram group, right?
No, I am not in Telegram group.
So what today what I've done, this is my first day in Henry Aven. So what I will do, I will join that Telegram group. They have created one Telegram group where you can join. And what I will do, I will update everything instead of depending on support team. What I will do, I will update everything, that what will be the timing of sessions, and if possible, I will share the link also. But I think all links are available in LMS. You can directly join from LMS also. So I will update everything in group itself. So what you do, you just ask for the group link, right? And you just join that group, right? So directly I will be communicating. So you can,
that will be better.
Yeah. In case if you will be facing any problem, you can directly talk to me.
Sure.
So if you see, this is the old format of balance sheet, and you can see the old format. First start with shareholder fund. It includes share capital, reserve, and surplus. Non-current liability, it includes deferred tax liability, long-term provision. Then current liability is given. It includes short-term borrowings, trade payable, other current liabilities, short-term provision. Then non-current assets. These items are given, right? Financial asset, tangible asset, intangible asset, non-current investment, long-term loans and advances. Then current assets are given. So you can see the size of balance sheet. Size of balance sheet is very small. Right? You can see the length and size of balance sheet. It is very small. Now, if you see the format of new balance sheet, right? So you can see here they have included so many line items now. So first line item is given. They are starting with asset now, right? So first is given property, plant, and equipment, right? Previously we were recording it as a fixed asset. Now new name has been given by new accounting standards. That is property, plant, and equipment. So we know when we have to record any expense as an asset and when we have to record any particular transaction as an expense, right? So if I'm buying, let's suppose if I have purchased this cell phone, right? If I'm buying this cell phone, so definitely why I will be recording this cell phone in balance sheet, because definitely the life of this cell phone is more than 1 year and I will be getting future economic benefit, right? Pakke I will be getting future economic benefit, right? But let's suppose what I'm doing, I'm buying this calculator, and let's suppose life of this calculator is 3 months. So what I will do, instead of transferring this calculator amount in balance sheet, I will show in profit and loss account. Why? Because the life is lesser than 1 year and I won't be getting future economic benefit from this calculator, right? Yeah, definitely, Pankaj, I will be comparing both the balance sheet. I will be comparing P&L account also and balance sheet also, right? So when we record any transaction in books of accounts, when it provide in balance sheet, when we record any transaction in balance sheet, when the life of that asset is greater than 1 year and it provide future economic benefit. What is future economic benefit? Future economic benefit means those assets which increase our revenue, which increases the revenue of business. Then if we can say that that particular asset will provide you future economic benefit, right? Now, have you ever heard about decommissioning charges? I think you don't have heard about this decommissioning charges, So let's suppose what I'm doing, if I'm buying any machinery, I'm just giving you the idea of new IFRS, how it is different from old IFRS. Right, let's suppose what I'm doing, I'm buying any machinery, right? I have purchased one machinery whose cost is 10 lakh rupees, right? Along with this, I have paid taxes also. Let's suppose I have paid taxes of rupees 1 lakh, right? And what I've done, I have paid transportation charges also, right? Let's suppose I have paid transportation charges, that is 2 lakh rupees. And now I have to pay installation charges also, right? Let's suppose I will be paying installation charges of rupees 1 lakh. So what will be the total value of machinery? What amount I will be showing in balance sheet and what amount I will be recording in P&L account? So here you will say whatever expenses are incurred till installation of machinery, all those expenses will be capitalized, right? Till installation, whatever expense we incur, let's suppose we are paying some import duties or we are paying some taxes or we are paying some transportation charges, and we are paying some installation charges. So all those costs will be transferred in balance sheet. So here the cost of machinery is going to be how much? It is going to be 15 lakh rupees, right? And we won't be showing any amount in P&L account. Let's suppose if we are incurring some after installation, repair and maintenance cost. Right, after installation, we are incurring, let's suppose, some repair and maintenance cost, that is 50,000 rupees.
14 lakh.
Okay, sorry, it is 14 lakh. Yeah, it is 14 lakh. Right, after installation, let's suppose we are incurring some repair and maintenance cost, that is 50,000 rupees. So then we can record that particular cost in P&L account. Instead of recording in balance sheet, we will be recording that transaction or that expense in P&L account. So this is how we were calculating the total value of machinery. Now what new accounting standard says? What new accounting standard says? If we are buying machinery, definitely the cost of machinery is going to be 14 lakh rupees, right? Now what new accounting standard says? There is Ind AS 16, or you can say IFRS 16. IFRS 16, right? IFRS 16. It is IAS 16, sorry. IFRS, IRS, both are same, right? So if you see here, just ignore it right now. I will take only IFRS Ind AS 16. What Ind AS 16 says, we have calculated the cost of machinery. It was 14 lakh. Now Ind AS 16 says that your calculation is absolutely correct, right? Now what we have to do here, Ind AS 16 says that you have to include decommissioning charges also. Now what is decommissioning charges? Decommissioning charges means uninstallation cost. It is uninstallation cost. What is uninstallation cost? Uninstallation cost, let's suppose I have purchased one machinery in year 2020. Now in year 2030, what we will do, we will uninstall this machinery. After 2030, we can't use that machinery anymore, right? It will become scrap, right? So what we will be doing, we will be paying some uninstallation charges, or you can say we will be paying some decommissioning charges. Now in year 2020, what management has to do? Management has to do the forecasting. What forecasting they will be doing? They have to forecast the amount, that what amount they will be paying in year 2030 for uninstallation of machinery, right? So let's suppose management has forecasted that they will be paying 2 lakh rupees after 10 years. In year 2020, they have to forecast that what amount they will be paying for uninstallation of this particular machinery after 10 years, right? So they will be calculating, they will be forecasting this particular decommissioning charges. And after that, what you have to do, you have to calculate the present value, right? You have to use discounting factor and you have to calculate the present value. Now, if you are learning accounting now, so you have to learn financial management also, because everywhere you will get this present value and future value concept, right? I will show you the calculations also in coming lecture. So what you will be doing, you will first, management has to forecast this particular amount, and after that, what they have to do, they have to use the discounting factor and they have to calculate the present value, right? So let's suppose the present value of 2 lakh in year 2020 is, let's suppose it is present value of decommissioning charges, let's suppose 0.3 lakh or 30,000, you can say, right? So here what you have to do, you have to calculate the present value of decommissioning charge, and this particular amount will form part of cost of machinery, right? This particular amount will form part of cost of machinery here. And now in balance sheet, what we have to do, we have to record asset value, that is 14.3 lakh. It will be 14.3 lakh, which we will be recording in balance sheet now, right? So these are the changes which took place due to implementation of IFRS, right? So hopefully you are able to understand that what is the logic behind for implementation of IFRS. So you can see it is very logical, right? We have never thought that we will be recording decommissioning charges also, but IFRS says that you have to record decommissioning charges also by calculating the present value of those decommissioning charges, right? So there are several new adjustments which are implemented because of IFRS. Yes, Anishi, what is your doubt?
You told that we will be including the 30,000 in the cost of the asset, where we will give the corresponding credit in our books of accounts.
Yeah, definitely. It will be shown as a liability also, right? So it's a good question, right? Here, when you will be preparing balance sheet, so what will be the corresponding effect? So here, you will be recording asset whose value will be 14.3 lakh, right? And correspondingly, what you have to do, you have to create liability also. Decommissioning liability, right? Because in future, definitely you will be paying this amount after 10 years, right? So you will be creating liability also. So this is going to be the corresponding effect, right? We will do question on this topic because we have to calculate now interest cost, right? So on this particular amount, we will be calculating interest cost also every year. So we will take full-fledged questions on this particular topic, right? So corresponding effect will be liability. We have to create liability. Is it okay? Yeah. So if you see here, so they have replaced fixed asset with property, plant and equipment, right? You might be knowing about capital work in progress. Investment property, there is separate accounting standard for investment property, right? So we will discuss that separate accounting standard also. What is investment property? I will give you the logic or brief about this particular standard. You know, if I take example of Reliance Limited here, if you see, I'm taking the example of Reliance Limited. Now, Reliance Limited, they are having multiple offices across globe, right? They are having their office in Mumbai, Delhi, everywhere they are having their office, right? Now, what they do in their office, they do manufacturing, right? Or they provide services, right? They provide services from their offices. Pakke se what they do manufacturing or they provide services, right? So you can say they are earning operation income from their offices, right? They are earning operation income from their offices, but they might be having some offices, they might be having some property from where they are earning rental income, right? They might be having some property from where they might be earning rental income. It can be building or it can be land, or it can be both, right? So the property from where they are earning rental income, or they have invested in some properties where they are expecting some capital gain. They are not running their operations from those property, right? So this is what the meaning of investment property. Like this, there is separate accounting standard for investment property. The property from where you are earning rental income, or the property which you have purchased for capital appreciation, capital gain, right? You're not using that property for operation or for your services, for provision of services, right? So for that, there is a separate accounting standard, and that accounting standard is investment property. Before implementation of IFRS, there was no such kind of accounting standard which talks about investment property, right? So every property we were including in fixed asset or property, plant and equipment. Now you have to show those investment properties separately, right? Now, after that, goodwill is given, other intangible asset is given, investment in joint venture is given, then financial asset, right? There is separate accounting standard for financial asset, that is Ind AS 32, 107 or 109, right? Generally, IFRS numbering is 32, 7 and 9. We will see the numbering and everything in next lecture, right? So if you see here, so there is separate accounting standard for financial instrument, and I think that accounting standard is complicated, most complicated accounting standard in our all standards as compared to all standards, right? So we will be learning this standard in detail, right? Ind AS 32, 107 and 109 in detail. We will be learning these accounting standards, right? Now, if you see after financial asset, deferred tax asset, there is separate accounting standard. You might be knowing about deferred tax asset, but we will be learning this standard also in detail, right? Deferred tax asset. Now, remaining items are same. Non-current asset was there in previous balance sheet also. Current asset was there in previous balance sheet also. So you can see inventories. Then again, financial asset is given. So for this financial asset understanding, we have to learn these accounting standards. So we will be learning these accounting standards in IFRS itself. Then if you see in liability side, other things are given like equity share capital. Other equity, we have already discussed that what is other equity, right? Then if you see liability, then financial liability is given. So the financial liability is same, right? We have to learn Ind AS 32, 107 and 109 to understand this accounting standard. So definitely we will be learning this accounting standard. Financial liability, to understand this concept, we have to learn this accounting standard, right? And provision and current liability is given. So hopefully you are able to understand that why there is difference in new balance sheet and P&L account and in old balance sheet and P&L account. Is it clear to you all? You just let me know. Is this concept is clear to you all? Any doubt in this concept? We will discuss each and every accounting standard in detail, and after that you will be able to understand balance sheet or profit and loss account in accurate manner, we can say, right? Chalo. So in case if you are having any doubt, you just let me know. For today, I will be teaching this much only because I am not well. So from next lecture, I will be taking session for 3 to 4 hours. But right now, today, I will be teaching this much only. So do you have any doubt or query? You can ask your query. Chalo. So those who have not joined the group now, you can request to the support team, so they will include you into the group. Definitely Vinny, I will share these material with you all in group itself. So that is the reason I'm saying you just join a Telegram or WhatsApp group. There I will be sharing these data with you all. Okay, I will be sharing annual. Yeah, definitely I will be sharing schedule 3 with you all, Shavani ji. So there you will see the new format.
Will there be any pre-reads available before your next session?
Yeah, definitely. Today I will share complete data with you because I am having complete notes with me of all 60-hour sessions. So I will be sharing everything with you all today itself. Today or maybe tomorrow once I will join the group.
Okay. And I don't have the WhatsApp group link.
I think they have created Telegram group. They were telling me that they have
Mm,
Telegram group. So you just
Yes, we are
ask.
getting.
Yeah.
We are going into the Telegram itself, not going to the WhatsApp group.
Yeah. So I will be sharing everything in Telegram because in Telegram there is no memory limit, right? In WhatsApp I can share the file whose size is lesser than 65 MB, but in Telegram I can share 1 GB file even. So I will share everything in Telegram itself.
Okay.
I will be sharing every material. Okay, guys. So take care. We will meet again in coming Saturday and Sunday. Okay, bye bye.
I hope from next week onwards we are going live at 7:30 itself.
Definitely. Yeah. Okay, guys. Take care. Bye bye.
Yeah. Thank you very much.
Bye bye.